Welcome back, ladies and gentlemen. Indeed, a great presentation by Scale Fusion. Of that, we now move on to our next panel discussion session. Very interesting and very powerful topic and subject, digital payments transforming the way you pay. And to discuss on this wonderful panel, I have with me a plethora of experts of the same domain from the NBFC sector. So let me introduce without further delay our honorable panel members in sequence. Joining first, we have Ratan Lahri, who is the Chief Business Development Officer from Mahindra Manulife Mutual Fund. A warm welcome to you, Mr. Lahri. Joining next,
Thanks,
we
Anna.
have Srivat Swaradarajan, who is the COO from Spice Money.
Hi.
Welcome to the panel.
Thank you.
Joining next, we have Nikhil Bandi, who's the EVP and CIO and Business Operations from Vistar Finance.
Hi.
A warm welcome to you, Mr. Bandi.
Awesome.
Joining next, we have Vijay Agarwal, the CTO from Bharat Pay. A warm welcome to you, Mr. Agarwal.
Thank you.
Joining next, we have Amit Kumar, who is the Chief Technology Officer from Easebuzz. Welcome to the panel.
Yeah, hi.
Joining next, we have Smitesh Shah, who is the Chief Technology Officer from Ambit Finvest.
Hello, everybody.
Welcome to the
Nice
panel,
be on the
Mr. Shah.
Yeah, thanks for being on the panel. Hello, everybody.
Joining next, we have Mr. Subhash Kelkar, who is the Chief Technology and Digital Officer from ICICI Securities. A very warm welcome to you, Mr. Kelkar.
Thank you.
And now, ladies and gentlemen, let me introduce you to the moderator of this panel session, Rakesh Kumar, the Head of Business Application IT from Indostar Capital. So, Mr. Rakesh Kumar, all over to you, the captain of the ship, moderator of this panel. I am looking forward to a fantastic session of all the experts here and, of course, the moderator. I am sure the panel is in wonderful and able hand, Mr. Kumar. Hope we have a fantastic panel discussion session. So, all the very best panel members wishing a great success in the panel. Thank you.
Yep. I guess case is having some. Yep. So let me start. Yeah. Thanks, Anna. Thanks for the introduction. It was really indeed a nice, day, and it's thanks for providing that opportunity to be part of this esteemed panelist. A quick introduction about Easebuzz. Uh, we are a fintech company having focus on payment aggregation business with expertise in building software solutions on top of payment stack, solving end-to-end payment collections problem. Yeah, I guess Rakesh is on now.
Yep, sorry.
Yeah, I guess there's some glitch. So yeah, continuing. So we are a fintech payment company. We're a fintech company having focus on payment aggregation business with expertise in building software solutions on top of payment stack, solving end-to-end payment collection problems. I'm talking about the ecosystem of product. Yeah. I'm talking about the product ecosystem of product and services powered by analytics, having payments at its core, and more than 10 comprehensive products with single sign-on capability to solve domain-specific problems like education, lending, subscription businesses, for supply chain, utility, and insurances, etc. So nobody wants vanilla payment solutions nowadays. Every business needs a lot more than a payment solution or payment system. Coming back to the topic where I see payment system and innovations are coming evolving together from NBFC perspective. BNPL has grown really fast recently, getting tailwind effect from the pandemic situation. We see a lot of core challenges any MDFC faces, like customer identification, segmentation, NPAs, credit assessment, etc., which is core of the business problem. But many problem they run into is not their core business, like payment collections, reconciliation, regulatory compliances, reporting, disbursements, API readiness, etc. So these all challenges are not related to their core business. Why can't they escape it, and like, why can't this can be done via the via the payment solution provider? Similarly, as an a payment aggregator, we have that ideology where we want our businesses, our merchants to focus on their core component, not the the subsidiaries, the satellite problems they run into. So, as a payment aggregator, we always focused on helping NBFCs to help you focus on your core business functions, and let us do everything else. Like Easebuzz platform offers a service which can bring you the banking products like escrow accounts wrapped around. It's a platform as a service solution, which brings banking problem products like escrow account coming with e-collect integrations all together with all the virtual account setup integrated already, and it is powered with all the APIs. Like it can be a KYC API, video KYC API, credit bureau APIs. We have integrated everything for you already. We have integrated India Stack APIs already. We kind of planning to get OKN integration done in this platform altogether, so that you have everything backend ready and you can focus on your own application, your own workflows. You can focus on your core challenges and bring the best out of for your use cases. And that platform will have the capability like which we have already with our payment solutions, disbursement solutions, with the collection products, comprehensive products which we have. And then we have amazing products which is having smart automations, analytic built inside, which has all the cross sell upsell capabilities which can enable you to do a lot more what you do not want to keep inside your functions. So I see major innovation and disruption will happen in collections methods, where where e-natch auto pay will evolve better with providing better user experiences. Right now, e-natch is something where users are kind of facing a lot of problems while dealing with. We are bringing paper based e-natch and everything is together and it will eventually evolve, and all the payment systems and the digital payments will bring capability like value-added services like securitization of products, like while somebody is getting a loan, they can insure their loan with just addition of opt-in option of rupees 30 rupees, and then they can insure it right away while doing the payment, and everything happens automatically in the backend, and everything can be handled seamlessly, and that we are already doing with a lot of NBFCs and LSPs. So we all know payments like simplest payment solution, like payment links are simplest solution to get the collections done, which is quite popular. But does it solve any problems, any other problems for the business? What if there is a solution which can be used by API SaaS based or simply via plugin services, even works on Google and or Excel plugins? What if the system itself sends the communication via all any communication channels, like it can be SMS, it can be WhatsApp message, it can be auto calling bots, emails, with all everything personalized template. So isn't this personalization is the next step which everybody is kind of converging to? The plus and this product itself chooses everything automatically based on due date. Everything gets the content gets chosen. What if the system learns the customer behavior by tracking all the data points, like did they receive message, did they open it, did they proceeded the payments, and where they did leave the environment, and based on that we can optimize the further communication with the merchants, with the customers, so that we do not have to constantly hammer them. We know when they are going to open their SMS, when they will, there are high probability that they are gonna pay the due amount. So that is the analytics which we are building in such applications. We also give them an opportunity. We give an opportunity where they can cross sell, upsell their products. They can even collect customer feedback on the same go. That if a customer grievances, they can type in the stuff, and we provide all the analysis to these NBFCs where we can give them churn analysis, cohort analysis, and the word whatever word graph you want to see, we can bring that all to you, and that's the value addition which we are bringing to them. That we are empowering you with all the data points which can be available to you, so that you can make decisions, better decisions. The best part is if we have kind of many solutions wrapped with such capabilities. One of them is one of our flagship product, which is Easy Collect, which is doing all everything, which is just accepting name, email, phone, amount, and due date, and leave everything to that product. It has an analytics inbuilt, offering everything. And we have observed businesses reducing their collection cycles from 42 days to 3 days, and this is not we are speaking. They are publishing in their annual reports. In education, we have seen this has got reduced from 15 days to 2 days. That is, and we are working with all major institutes like Symbiosis, Nirma University, you know, ASBM University, Parallel University. So we have done this for and this is how the payment system and the digital payments is gonna evolve. There are many advancements we would business witness in payments domain with SI hub and tokenizations fitting in the current scenarios. We would expect invisible payment options like implemented in Amazon Go based on body scans or facial scans and everything, which will come into effect and which will gonna take effect in Indian market as well in some time. Mobile payments would become more smoother and secure with a lot of capability which we are bringing in our mobile devices like CPOS, MPOS, EPOS. The adaptability will grow significantly, and it's already grown significantly. We have observed, now UPI is taking 50% of the whole, business transactions, and it's covering fast. Some innovations where payment wrapped around connected banking setup will revolutionize the sectors like supply chain, manufacturing, marketplaces, B2B space, where large ticket size is generally involved. Typically, these are the businesses who are suffering with a lot of automations with the banking products. I think another 5 years is going to be very exciting for the fintech industry, shaping up the future. Thanks for listening to me. I will be happy to take up any questions. With that,
Sure.
over to you.
Thank you, Amit. Thanks for the valuable insight. Apologies that I couldn't join earlier because of some network issue. Okay, let me welcome all the panelists available here. Okay, so going as per our topic today on the digital payment, with the widespread adoption of smartphones, okay, and the improvement that we see in the mobile network infrastructure that has been brought in, okay, we have seen actually a lot of growth in the mobile payment segment. Okay, now this also has been added due to the ease and experience that the mobile payment service provider now provides. Okay, the quality of service that they provide. Okay, the price at which these data networks are available today. Okay, and the introduction of loyalty and incentive programs that are getting attracted towards mobile payment network. Now, Mr. Vijay from BharatPay, may I ask your views on the mobile payment infrastructure in India, and what do you see? Where do you see probably the future of the mobile payment network?
Sure, Rakesh. Then that's a great topic to touch upon. So what has happened in India over the past few years is that mobile penetration has grown by leaps and bounds, and more so on the data side. And voice penetration was already quite good, but the internet penetration on mobile, the smartphone penetration, that has increased very, very significantly, and that has brought on multiple, I would say, not just in payments. Apart from payments, also there have been a lot of innovations, a lot of disruptions that have happened due to the accelerated change in behavior that it has brought about. Right? Fundamentally speaking, smartphone as a device brings in a lot of possibilities which were not there earlier. Coming from the era of the early days of the internet, wherein people had to dial in to connect to the internet, and the bandwidth was pretty low. The connectivity was poor, so it could only be used for very specific applications. Then came broadband. Then like people got good bandwidths, but it was still tied to a physical location. It could only be used from your desktop computers when you're sitting at your home or from your office environment. What phones have brought about is anytime, anywhere connectivity. So we always carry these devices with us. So we are always connected to the internet. And smartphone is a pretty capable general purpose computing device. We can build a lot of applications on top of it. So naturally, and we've seen like it was always inevitable that over time a lot of other gadgets that we used to carry, like be it watches or credit debit cards, and now cash for that matter. All these things are slowly fading away, and smartphone is taking the place of all these things. What the rapid adoption of smartphones has done is it has accelerated this change. It has happened. It would have happened over a decade or so. It has happened over a couple of years. That's the pace of change that we've seen. And for payments especially, it is one of those applications which is quite well suited to a smartphone kind of a device, and that is why we've seen something like UPI take off like nothing has ever taken off ever before, like UPI has. Like the pace of growth that we've seen in UPI, I don't think there is any other precedent, historically speaking, of such a rapid pace of adoption of a new technology as we've seen in UPI. And the simple reason is that it makes a lot of sense. It is very intuitive. It is how, like, once you've seen it, it feels like, oh, this is how it should have always been, probably. Why do I need to carry all these different coins? Why do I need to carry all these different cards? If I can have like one device which I am anyways carrying, which is all the information, which recognizes me, can prove my identity as a user, as an account holder, can connect me through the internet to any of the businesses, any of the other people. It brings in all those capabilities, and therefore mobile payments, I would say, is the future of payments. It is going to happen. It's like already happened to quite a large extent, and whatever is remaining will also happen, and quite rapidly. It also got a lot of inherent advantages which are not possible with cash. Amit touched upon the topics of deep integrations with loyalty programs. So we are as consumers associated with different brands, different businesses, and we've got a relationship with them. We are repeat customers, so they also value that relationship, and they want to give certain rewards. So that close association, that deeper integration through a payment mechanism also helps the businesses uh, give certain incentives, give certain rewards to the customers that can then be tied through payments. Right? And those are all very very personalized offerings, as against a generic offering that could be done by an offline storekeeper, let's say, 5 years back. Like, they could only offer a generic discount, a 5% discount, a 10% discount. They could vary the discount by SKUs, but not so much by customers. But now with deep technology integration, everyone can benefit from these things. And what I like the most about it is that this power of technology is not limited to the big technology firms. Like this power of technology is being made available to a tea stall down the road. Like, those guys can also benefit from the best of technology. They can accept digital payments in a very safe, secure manner, in a very convenient manner. And we are working on lots of applications. We always keep working on lots of applications to enable these people to get more and more out of the technology without really having to worry about the inherent complexities and the costs of building and maintaining these systems. In that sense, the democratized access to the best of technology in payments is something that I personally get very excited about. and we work on multiple applications. And
Sure.
there are various
Thanks.
aspects of payment. Yeah.
Sorry, Vijay. Continue.
And there are
Sorry.
various aspects of payments. It is not a, like just one thing. There are different kinds of payments. There are one-time payments. There are recurring payments. There are P2P payments. There are P2M payments. There are payments that have an element of loyalty, discounting. There are refunds. There are cashbacks, and like lots of different kinds of payments. And like technology brings in and gives us a very simple, intuitive interface to handle all these kinds of transactions. And that is also something which goes in the favor of the mobile devices, with the mobile internet infrastructure, as against the traditional ways of exchanging money. Yeah, Rakesh.
Sure. Thanks, Vijay. Thanks. That was quite insightful. Now, while we have all been speaking about digital payments and mobile payments and its growth, okay, but still, cash is the king, okay, and that brings to a very important discussion, okay, on how far are we from being cash light or cashless economy, okay. So, Mr. Srivats from Spice Money, we would like to have your view on this discussion point on where do you see and when do you see India being a cashless economy?
Sure. Thanks, Rakesh, and thanks, Vijay, for setting the context on the mobile usage and other payment ecosystem. Uh, to explain about getting from a cash to a cashless economy, first, I would like to introduce Spice Money, which will set the context and background as well. So, Spice Money Limited is India's largest rural fintech, and we cater to the tier 3 and tier 4 location of the population. And we use merchants as a strong distribution network. And most of the products which the merchants through us serve to the end consumers are in the form of an ATM cash withdrawal, deposits, DMT, cash management systems, and other business. So that sets clearly a context that there is a large amount of the cash requirement that is still there in the economy. If you go for a survey and if you ask the Indian consumers, 79% of them willingly acknowledge and say, yes, we need to move out of cash and get into a digital. But it's far away from reality in the current space. At least for next 5 years, the ecosystem of cash withdrawal, the ATM networks, there is a clear gap need analysis out there. And getting into a distribution model where merchants to reach to the customers to create an ATM cash withdrawal and other banking ecosystems becomes imperative and critical. So next 5 years, there's going to be a significant growth in terms of ATM cash withdrawal, ATS, DMT, and other businesses, which is going to grow exponentially. Of course, UPI and other payment systems, which has come and fairly decently adopted in tier 1, tier 2, and decently adopted in tier 3 and tier 4. Now, what is the bottleneck when it comes for 100% moving out of cash to a cashless kind of an economy is it requires complete tax reforms. Now, if you look at our Indian taxation system, you have got around 3% of the Indians who are paying direct taxation. We have thankfully covered a lot of people under GST, but most of the consumers are the one who are paying the GST system as well. Now, when you want to transition out of the cashless economy, one of the important mode for us to have the end mobility capability or the connect capability for the end consumers. If you look at the penetration of your smartphones to the entire population of India, you still have 32% of the Indian population still using non-smartphones. So that becomes a bottleneck. So at least for next 6 to 7 years, you will have a parallel economy growing. Cash economy is going to remain out there, and till the time you don't have a complete tax reforms and transparency coming out there, the cash is going to be the king. When you look at the larger part of the population, they still reside in tier 3 and tier 4 locations. And if you look at the way in which the daily wages are earned or self-employed peoples are earned, to a very large extent, the banking systems are not completely being used. It's still the cash economy that is still going out there. When you look at tier 1, tier 2 locations, there are economic corridors which are there, even in tier 2 locations, tier 1 and tier 2 locations, where cash is still the key. You have APMC markets and other economic corridors where you've got laborers who are still working on, who are still paid wages on cash. You don't make payment through UPI or bank systems. So this is going to be there at least for next 5 years, growth in terms of cash withdrawals. It also depends upon the amount of bank accounts that you open and it also depends upon the complete ecosystem how it is going to adopt the banking system to do the transactions. So you have a clear 1 decade of growth story going on, 5 years where these business of cash withdrawals, AEPS, DMT and other things going on, and then eventually UPI plus your smartphones getting penetrated in tier 3 and tier 4, and then eventually you will have reforms coming in, and then the cash will become more into digital. Amit, you're on mute. Sorry, Rakesh, you're on mute.
Sorry. Okay. So thanks, Rivats. That was quite insightful. Okay. Looks like the view is that we probably have a long way to go for a cashless economy. Okay. Coming back to the digital payment infrastructure, while we have seen 30% increase in the digital transaction numbers compared to the last financial year, okay, which stood up close to 4,300 crores in the last financial year. I would invite Mr. Ratin to speak about his views and thoughts from a practitioner point of view. Okay, what are his views and thoughts on the digital payment infrastructure and the overall digital payment network?
So thanks, Rakesh. So I'm Ratin Lahiri. I look after the digital business and marketing at Mahindra Mutual Fund. And prior to this, I've had stints on the business side at eBay, at Beru, at DBS Bank, which kind of pioneered digital banking in India. So for me, because of all these various stints, I've actually got to see the growth of digital payments from its infancy to its current adoption, which I think varies across businesses, with I would say is around 35 to 50% of most organized businesses today. And I'd like to take this in two parts. One is from the consumer side and one is from the business side. So from the consumer side, I think the number one thing is consumers fundamentally look at ease of user experience, right? The simpler the experience, the better the adoption. And to Vijay's point about the rapid adoption of UPI, I think what has made it actually take off at that rate is that it's so intuitive, and once you start using it, it just seems like the most simplest thing to do, right? So I think ease of user experience is the number one thing. The second thing I think is to do with trust, and trust not only in the payment method but also in the underlying product, right? So, for example, in e-commerce, I don't know to what extent, let's say, the pandemic has changed the metrics, but for a very long time, the digital payments used to range around 45-50%, and the balance 50% used to be cash. And it's not that a large chunk of those other customers who were paying in cash could not, do a digital payment, but I think they had essential trust issues whether they would get the right product and on the delivery of the product itself. So as long as the delivery of the underlying product itself improves, automatically payments as a mode, would pick up. So that is, the second point. And the third point I think is that consumers would, after these 2 points, look at a lowest cost of transaction, right? So transactional costs become very important, and therefore, as we get mass adoption, as tech becomes more cheaper and scalable, the lower the cost of the transaction, it'll kind of lead to a greater adoption. Now, a couple of other points that I've noticed is that one is that consumers get used to a certain mode of payment or behavior, right? So even on our mutual funds platform, we've seen that below 50,000, let's say, bulk of payments happen in UPI. But there are certain consumers who, if they were doing net banking earlier, they will continue to do net banking, even though UPI might be a more intuitive and more simpler mode. So once a certain behavior is kind of set, especially over 4, 5, 6 times, then it becomes pretty difficult for that behavior shift to happen. And I think the last point, I think somebody else touched upon this, is that there's still a very, very large unaddressed segment of the market who has not adopted digital payments, who have only partially adopted digital payments. Now, some of it could be language barriers, could be tech issues, could be trust issues. But I think as an industry, one will have to think as to how do you kind of get this overall adoption. So, mobile phones is one route, maybe languages is one route, maybe simpler UPI is one route, maybe, micro payments is one route, maybe encouraging P2P payments so that the trust factor is at least there, is one route, maybe penny testing is one route. So there are lots of kind of options possible. But I think one of the things is that after you hit this 30, 40, 50% penetration, how do you then take it to the next level, and how do you take that at a scalable? So that maybe I think some of the industry experts can speak about. From the business point of view, I think it is very, very simple. I think businesses first of all want their business momentum to continue. So businesses. So the thing about cash is you receive the money in cash, you receive money by check. It's 100% in, right? There is, a check can obviously bounce and so on, but there is a certain assuredness to it. Luckily, I think for most businesses, digital payments have only improved the stickiness of the customer and the stickiness of the product. So, and therefore adoption have been quite good amongst businesses. There's a certain cost of cash, and businesses are happy to eliminate that, fraud, handling charges, costs, etc. So that's kind of one part. I think one of the challenges still remain is that transactional failures in the case of digital payments still are fairly high. They're still double digit, I would suspect, across quite a lot of platforms, including UPI. And some of it has to do with consumer education, not going and pressing, let's say, the password on time and so on and so forth. But you still have a very large transactional failure. And I think the next step would be that how do you get very, very detailed analysis of why the payment failure. So you don't want to know at the business end that the payment has failed. You would like to know, let's say it has failed because, let's say, the customer set a limit of transfer from a bank of only 50,000 and is trying to transfer 1 lakh, or could be any of these other reasons. So I think a detailed, kind of almost like an instant analysis of the reason of the failure, and having support of marketing automation by which you can kind of, give the customer a feedback saying, hey, your transaction has not gone through because of XYZ reason. So that the customer can kind of, quickly complete the transaction and the transaction doesn't get kind of lost in the process. So I think this is a very important next step for the payments industry to work on. And the last point I'd like to still end with is that, India is a very large country. I'm in the mutual fund space after so many years, and we're a very large business overall as an industry. But the penetration of, let's say, mutual funds is only 3%. The penetration of stocks and shares maybe is 8-9%. So the penetration amongst the population still, for a lot of categories and a lot of financial products, is still actually, maybe in the early teens. So how does one, take it from the early adopters and the youth who are, very easy and very quick to adopt a lot of things? But how do you reach the balance unaddressed population? I think that is one question for the payments industry to answer. Thanks.
Sure. Thanks, Ratin. Thanks for that. Obviously, the digital payment space have been growing continually in the last couple of years. And I take your feedback on, there are a couple of points that the payment industry per se has to look into, which includes one, the customer's trust factor, okay, of how better is it compared to the cash. Cash, as soon as you give, the transaction is done, which brings to the other point which you spoke about on the failure piece, okay, the failure of these transactions. Okay, so let me ask Mr. Subhash Kelkar, what are his views on the digital payment network and the infrastructure, and what are his views, and does he agree with Srivat's view on the cashless economy?
I was supposed to talk about contactless payments as well. So
Sure, Subhash.
Done
Subhash,
some
continue.
homework on that, and maybe I will speak on that as well. So, of course, I mean, post-pandemic is what I've been given a topic, that post-pandemic, what is the status of the contactless payments? Very interesting topic, contactless payment we have all been using now. In fact, digital payments, we used to write checks earlier and we used to go to ATM, but I don't remember going to ATM in months. So this contactless payment has really gone ahead and moved ahead. I mean, if you look at the MasterCard study, they say 74% of the customers are going to, demand for it, for demand for contactless payment, and they are not happy with contact payments. No, the millennials especially are very averse, and 86% of those, the study says that they want to go for contactless payments, and they will run away from groceries and pharmacies who are not offering contactless payments. So, I mean, a bulk of the population that is coming in India, and about 1.5 crore of them are becoming 25 years of age for the next 10 years. So you can imagine the kind of demand from the customers for contactless payments. It is here to stay, as I can say that. And to that effect, I think tap has replaced swipes and phones have replaced wallets. And Visa and other companies, MasterCard, or for that matter, American Express and many other companies have realized that, they have to invest in this. So the mobile is becoming a POS, and tap to swipe and other things, they have grown 2.5 times in the last 1 year, and it is here to stay. The trend is here to stay. You talk about the facial ID and biometrics and removing need for physical payments. I mean, case in point, a company in California, fried chicken restaurant chain, has turned to contactless payment to speed up its ordering process, and of course protecting its customers from COVID as well. But working with Pop ID and other data cap, I think data cap systems or something like that, the daddy's fried chicken, as they call it, is using kiosks enabled face ID enabled kiosks, and they are offering help and customer payments and redeem loyalty points and all that. And the third instance is very interesting, is the voice assisted payments. It is again a contactless payment, and you'll be surprised that the in-car payment, for the last 2020 is about $543 million, expected to go to $86 billion by 2025. So already people have started in-car voice-based payments. So I think very interesting ecosystem is developing, and Visa and Honda are now signed up together, and they expect a huge growth in the in-car voice-based payments. And you would also see these things, proliferating in your Google Homes and your Amazon speakers and all that. So I guess this is a very interesting piece to see. It offers a lot of future possibilities, so to speak. Infrastructure, of course, supporting well, but security is my concern. I mean, you can put a photograph, or you can copy a face ID, and you can go in and buy in place of somebody, and all these kind of things are possible. Your wallet is nearing that card reader. It'll automatically, if it is in that mode, it'll automatically pay under 2,500 or 5,000. I mean, the current norm is 5,000, I think. So there are security issues, but I think it's very interesting. The voice-based thing, I believe, will catch up very soon, and the Face ID recognition and other modes of payment, and mobile becoming POS, that is really going to change the things.
Sure. Thank you, Subhash. Thanks for the insight. Yeah, I do agree with you saying that the pandemic has only increased the adoption of these contactless payment. While time will tell us whether with the markets opening up and business resuming back, will it go back to the pre-COVID levels, but I'm assuming that it doesn't, and the adoption is going to continue or going to increase. While we have been seeing drastic rise in the increase in the adoption of these digital payments, okay, especially by the retail shopkeepers post-COVID. Okay, I would like to hear from Mr. Nikhil on the Mr. Nikhil from Vistar Financials on the adoption of the digital payment methods pre-COVID and post-COVID in the NBFC segment.
Sure. Thanks, Rakesh. So, Rakesh, I would just think of how much time it took for the entire in the financial ecosystem for it to become more, I would say, matured, resilient. When we talk about times when there were barter system, from barter system we got into gold coins, and then from gold coins to a currency to a standardization of currency, and then we used to call USD to be the standard currency, and then we moved. Then there was an era which was last. If we just think of last couple of decades, the transformation just like exploded, and that is the place where we thought that are we going to adopt so soon? When we thought of adopting so soon in financial services industry as a whole, and NBFCs, predominantly NBFCs like Vistar. Vistar is one of the leading NBFCs for which provide business loans and secured business loans. So for companies like us which operate in tier 2, tier 3, tier 4 cities, it wasn't, we weren't very sure that how the adoption of tech-based payments is going to happen. But and we did this entire exercise 6 years back, of 5-6 years back, where we integrated payment gateway. We started integrating payment gateways for not only, so the first part was moving from these the check-based disbursements and the cash-based collection, that process, to a digital disbursement, so that there is an amount which goes into the account of the customer and the banking is mandatory, to a place where we wanted to get, instead of taking a cash from a customer, let's take this through a digital mode. Companies like Vistar, many organizations have undergone this transformation 5-6 years back. But the adoption of the same was a challenge for like the entire 4 years just before hit of this pandemic. The adoption was there, adoption was slow. I think a few foundations which government have put, I think I would always give the credit to this JAM, Jandan, Aadhaar and Mobile. This initiative, the drive which the government has gotten, has equipped organizations, the NBFCs, for, or they have made these organizations ready for digital payments. And during the first pandemic is the time which we saw that we can't underestimate a rural customer. The rural customers are as smart or many times smarter than many of the urban customers. The adoption just spiked up from a percentage would be single digit percent to a percentage which is more than 50% of those customers doing a payment which is a digital payment. So I think what we have seen is, in NBFC world, we have seen a steep rise in the digital payment. When I say digital payment, one thing which comes to everybody's head is UPI. But I think when we have enabled this, initially the banking system in such a way that the disbursements of a loan happens in the bank account, that created a foundation. Then when open banking came and the neo banks came into picture, not only the disbursement, but the collections, the NACH get transformed to e-NACH process. E-NACH process became easier. With all these things, we have seen this spike. I'm sure that with the convenience which we have seen today, and Vijay from BharatPay has mentioned it earlier, that after seeing how the UPI-based payments work today, we think this is the way it was supposed to be. There are a few things which I see which is going to happen now. In NBFC world, this is going to go for long. I do agree the cash is going to stay for, let's say, half a decade more, but eventually it is going to go away. However, the overall banking or financial services ecosystem, I expect that this distributed ledger is going to transform now our banking, our payment methodologies. So whatever payments which we are doing today, once the distributed ledger, the DLT technology gets into, like will have the overall acceptance, while after some of the Western countries now, we are seeing that there are going to be acceptance in more and more places on usage of blockchain as a technology, but a distributed ledger as a technology. I would see that there is going to be a transformation which we can expect within next 3 years. That's what I would expect in NBFC as well as overall financial.
Sure. Thank you, Nikhil. I think we are running out of time, so let me go to my last section or my last speaker, last panelist, Mr. Smitesh. We have seen a lot of global innovation happening on the digital payment front. Okay, we have seen big technology, large conglomerates becoming big technology companies now. Data becoming the new oil. We are seeing the implementation of open banking. We are seeing offline payment innovation. What do you think what are your thoughts on the innovation in the payment ecosystem? Okay, do you think AI and ML would actually add fuel to the growth of the digital payment?
Sure. Thanks, everybody. I think the panelists has covered a lot of ground. Just a small brief about Ambit Finvest. Ambit Finvest is part of the Ambit Group, basically catering to the MSME segment. They are the backbone of the Indian growth fire. And with pandemic coming in and also the demonetization and the government's initiative with respect to digitization, a lot of things have been covered. Naturally, as we speak, AI and ML, they are two sides of different coins, but always used interchangeably. So if I take one simple use case in the NBFC industry, which has been done is, we are the conduit where banking cannot be done, but there is a need for money and there is a need for disbursement. But as you disburse, you also have to collect. So AI, where it has really hit and being used by most of the NBFCs, specifically as COVID has hit everybody, is for collection. What is the propensity of default of a customer? This is the key, and that's where we typically take care of all of this into consideration. What is the point of the propensity of default of a customer? How do we chase a customer? I think that is where I think NBFCs have come a long way to use the AI in a practical term. That is one use case which I would bring across. With e-Natch coming in, also a lot of NBFCs, or we also started that how fast can I do e-Natch versus a physical Natch? Because with every physical Natch, I have to take 3 PDCs. There is a cost of operation. So AI also reduces operation, reduces risk of non-starters. So I'm specifically taking a use case of AI in the banking space. Every ATM typically has a cash flow, and there is a reserved cash which is put in that. And when weekend comes, what is the use? So AIs are typically used in what is the usage of cash or withdrawal cycle in an ATM. Like Shri was concerned, cash is here to stay. So that is the third use case which is there. But with all of this coming in, the biggest issue comes risk, the cybersecurity risk which hits us. So AI is also used on fraudulent transactions to be checked. With millions of credit card transactions, debit card transactions happening, there are a lot of use cases which are coming in the newspapers on how fraudulent transactions are happening. Internal fraud is the key risk which happens. How do you prevent internal fraud? So AI, ML, AI specifically are basically used in the use case of fraudulent detection. That is one of the key things. I would say the other thing with AI and ML would be how can you predict the customer behavior? I think Amazon is one of the great with their inventory and the way they give services to their Prime members. A lot of AI ML is being used to track the customer behavior, personalize the customer behavior. And I would say the use, like Vijay spoke about it, chatbot in AI and ML can be used to personalize the customer service. You know now that if I have to do a standing instruction on a debit card, I will always have to do a two-factor authentication. One day before, can I have a chatbot where can I have customers speaking on voice and give his OTP and get the transaction done? Technically possible. Second use case would be cancellation of standing instruction. Do I have to go to the bank? Do I have to go to the website? Can I do on artificial intelligence chatbot? So these are a couple of use cases which are there. ML would be used more on payment optimizations where the chances of fraud are happening. I have only 5 seconds to do a typical POS transactions, and there are a lot of failures, as my other panelists have told. So machine intelligence, machine learning can be used to do a transaction study of the previous thing and make. But yes, it comes with the risk of cybersecurity, and it's not that you put everything, it will start working on a day. It has to be a continuous learning process. You have to adopt the technologies. Yes. So I would sum it up in that way, that it reduces the cost of operations, it reduces the cost of fraud risk, it increases customers' efficiency, customer experience. This is what would really happen, and this is the way to go. A lot of fintechs are there, and I would say Indian companies are early adopters of all this, ready to experiment, ready to forget. A lot of startups are coming in place who are specifically into these areas, and there are a lot of use cases which can be used. That's how I would sum it up because of want of time. Rakesh, you're on mute.
Yeah, sorry. Thank you, Smitesh. Thanks for your time, and thanks for that. That was quite insightful on the innovations that we see in the not only in the payment segment, but the overall banking and financial segment. Okay, coming to the probably thanks everyone for your valuable inputs. Okay, we are now opening up this chat, opening up for the spectators or for the people who have been public to ask in their question. If they have any, they could put in their questions through the chatbot, and we would be so. I think we'll wait for a couple of more minutes. If anybody has any questions, we have kept the floor open for any queries or points that the audience would like to make. I think.
Yeah. So indeed. Yes.
I think we are done for the day. Since we have already run out of time, it was thank you all the participants. Thank you Synnex for the opportunity, and this proud sponsors for giving us the opportunity to speak and interact with such an elite lot of people around, and the wonderful spectators that we have who have joined us in this section. It was really a wonderful session for me moderating this esteemed panel of panelists. And thanks once again to Synnex and their proud sponsors. Thank you, Sana.
Indeed, that was a great, indeed, that was a great panel discussion session. Thank you, Rakesh, for moderating the panel so well. And thank you so much, all the panel members, Mr. Lahiri, Shrivats, Mr. Kelkar, Mr. Bandi, Vijay, Amit Kumar, Smitesh. Fantastic having all of you here on a busy working Thursday, and for giving time on such an important subject and topic digital payments, transforming the way you pay. Thank you so much, and thank you to all our viewers and attendees who are watching this event. So I'm sure a lot of takeaways from those interesting people from such an expert panel like this. Thank you so much once again, and thank you, Rakesh, for doing the honor of moderating. Hope to see all of you in the next edition. Thank you so much.
Your slide is also visible,